Welcome back to JMC vLearning. In your AAT 2 Advanced Financial Accounting and Costing syllabus, in this video you are going to learn another new aspect. So this is an accounting standard. You know, in your syllabus accounting standards are also required to learn. Okay. Therefore, this LKAS 2 accounting standard, which is the governing rule, which is the governing rule in accounting. Okay, so you are going to learn now LKAS 2, which is for inventories. Which is for what? Inventories. Lamai. Now this accounting standard for inventories means that this accounting standard say how you should account for inventories. What are the things that you need to present in the financial statements relating to inventories? What are the things that you need to disclose under the notes to the financial statements? Therefore, it's very obvious and it's very clear. LKAS 2 inventory accounting standard tell you how you should account for the inventories, what are the things you need to present in the financial statements, and what are the things that you need to disclose under notes. Therefore, this is the governing rule for inventories. This is the governing rule for inventories. Now, Lamai, before we going to learn how to account for inventories, first of all we should learn what are inventories. First of all we should learn what are inventories. Do you know what are inventories? I know, I'm pretty sure in AAT 1 you have done the closing inventory adjustment. You have computed the cost of capital, not the cost of capital, cost of sales. So you have done that. Therefore, you should know what are inventories. Okay, you should have, or else you might have a rough understanding. But here we are going to learn as per LKAS 2 accounting standard what are the inventories. So each and every accounting standard has their own set of definitions. This standard also has their own separate definitions, and based on that definition only I am going to tell you what are inventories. So this what are inventories, the answer for this what are inventories question is purely based on LKAS 2, not any other thing. Okay. You know, inventories usually in AAT 1, where you recognized inventories, where you recognize the closing inventory. Yes, now your mind is going far 1 or 2, 3 months back and you are recalling your memory. Where I recorded the closing inventory? If you can remember, you recorded this closing inventory in the statement of financial position under current assets. Then if you recorded inventories under current assets, inventory should be definitely an asset. Therefore, inventories in plural, inventories are what? Inventories are assets. Okay, inventories are assets. That's why you go and write closing inventory balance in the statement of financial position. Okay, my dears. Therefore, inventories are assets. Now, these inventories have several types. Okay, now the standard definition says about this each and every type also. So, inventories are assets held for sale in the ordinary course of business. Inventories are assets held for the sale in the ordinary course of business. Now, there is a learning point here. Held for sale. Okay, held for sale. Now we are keeping an asset to sell for the purpose of sell in the ordinary course of business. That means in the main business activity, in the organization's main business activity, that organization should sell this asset, For example, take a garment factory, Now for a garment factory, what should be the inventory then? They are keeping to sell what? They are keeping to sell the trousers, t-shirts, likewise. Those are their inventories which are held for sale. Okay. So garment factories. And in a motor vehicle sale, in a motor vehicle sale, the motor vehicles are the inventory. Why? In their main business activity, they sell this. In a grocery shop, okay, can the motor vehicles be an inventory? No. In a grocery shop, what they sell is sugar and flour, likewise the grocery items. So for a grocery shop, motor vehicle will not be an inventory. But for a motor vehicle sell in business, motor vehicle is definitely an inventory. So a grocery, any grocery item, we can say sugar, etc. Okay. I guess now you have a good idea, good understanding on this. So my dear students, an asset will become an inventory only if it is held for sale, okay, only if it is held for sale in the ordinary course of business. Here the ordinary course of business means that organization's main business activity. Okay. Great. So inventories are assets held for sale in the ordinary course of business. Done. Not only that, but also inventories are assets in the process of production for such sale. These are in the process of production for such sale. Now think like this. Here, this is a shirt. Okay. This is the shirt that in a garment industry or a clothing company that they are going to sell. Okay. In a textile shop that they are going to sell. So it will become an inventory. Now think, in a garment factory, to sell this shirt, there are some half produced shirts. Sometimes the shirt is only a cut piece and the shirt is only just so, but no buttons are attached. Likewise, halfly produced goods. Okay, halfly produced goods. So here, this is a halfly produced shirt. This is a halfly produced shirt. The works are not yet finished. So these are still halfly produced. So they are in the process of production for such sale. So why these are produced? Because to sell in the ordinary course of business. Therefore, not only these finished shirts, but also the shirts which are in the production line still being processed for such a sale is also identified as an inventory. And Lamai, not only that, any other material or any supplies to be consumed in the production process or in rendering of a service. Now think like this. To make a shirt, we need what? To make a shirt, we need cloths and we need buttons. Then we need wool. And not only that, what? We need the labor, not actually the labor, We need wool. So likewise, we need materials. Here, we need materials. We need materials. Therefore, these are also identified as inventories. For what purpose we are using clothes, buttons and wools? Initially, these clothes, buttons and wool will become a halfly produced shirt, and then that halfly produced shirt will become a fully produced shirt, a finished shirt that is going to sell in the ordinary course of business. Therefore, to make a sale in the ordinary course of business, some are in the production flow, some are in the materials. So all these three things are identified as inventories. Identified as inventories. So that's what an inventory is. Now, by looking at these three things, we can give three names. These are finished goods. Here, these are finished goods. Why? All the works are done now. We can sell that. Now we can sell that. We have the ability to sell. And then here, work in progress or else semi-finished goods. Take down semi-finished goods. Semi-finished goods. Okay, halfly produced goods. And those are raw materials. Here, RM is raw materials and other supplies. Raw materials and other supplies. Okay. Then Lamai, if someone asks from you what are inventories? Inventories are assets that held for sale in the ordinary course of business or in the production for such sale or in the form of materials or supplies to be consumed for the production. Clear? Simply, inventories are the finished goods, work in progress and the raw materials and other supplies. Raw materials and other supplies. So, you are very clear with that area. I am pretty sure if someone asks what are the inventories, you can now give an answer. Make sure when you give that answer, you need to check in which company they are asking for. Why? For a motor vehicle selling company, motor vehicles can be an inventory, but for other company, motor vehicle will not be an inventory. For a land selling company, lands will be inventory, but usually for other companies, land is a property, plant and equipment. For a grocery shop, the grocery items will be inventory, not a motor vehicle. Therefore, when you are determining whether an asset is an inventory, you need to check their ordinary course of business. That means the organization's what? The organization's main activity. The organization's main business activity. You need to look at that. You need to look at that. Okay, now we are good enough in identifying what are inventories as per LKAS 2. As per LKAS 2. So, let's move forward. Now, after identifying the inventories, we need to take those inventories into the accounts. We need to take those inventories into the financial statements. When we are taking those inventories into the financial statements, we need to give a value. We need to give a value. So that is known as measurement. Measurement means what? Measurement is giving a value. Giving a value. You have learnt all these things, okay? Giving a value. Measurement means giving a value. Now when we are giving a value to these inventories, LKAS 2 say we can either, here inventory should be measured at cost and net realizable value, whichever is lower. We need to check whether the cost or the net realizable value is low, then we need to recognize the inventory based on that value. We need to recognize the inventory based on that value. I am pretty sure you have done this in 81 also. Therefore, LKAS 2 standards say you need to measure the inventory at the lower of cost and net realizable value. You will learn what are the two concepts. So, simply speaking, cost is the amount that we spend to get that inventory item for me, or else to purchase that or to build that, the cost that we incur. Okay, and the net realizable value is the net amount that we can collect by selling those goods, the net amount that we can get by selling those goods in the market. So, here cost is what we incurred to get the ownership of that asset or to get the asset to us, and net realizable value is not that. The net realizable value is the amount that we can collect by selling that asset, okay, by selling that asset. Therefore, when you are recognizing these inventories in the financial statements, you need to recognize at cost and net realizable value whichever is lower, whichever is lower. So, where are we recognizing? Where are we recognizing? In the statement of financial position under current assets, under current assets, under current assets, okay, under current assets. Clear? I hope you are clear. So, we need to recognize at the lower of cost and net realizable value. Okay. Now, let us try a small question. Let us read. Amila's business sells 3 products, product X, Y and Z. The following information was available at the year end. So, the following information was available at the year end, at the year end. So, the 3 goods are there, X, Y and Z. You are given the cost and the net realizable value and the number of units. So, here X, Y and Z. So, you are required to value the closing inventory. Now, you know when we are valuing the inventory, we need to take the lower of cost and net realizable value. We need to take the lower amount. Okay. So, for X, number of units 100. For X, number of units 100 into what is the lower value? The lower value, here the lower value is cost. So, we need to recognize it at cost. So, 100 into 7, that is 700. And Y, number of units 200, 200 into here the lower amount is the net realizable value, therefore, we need to take that. So, it is 1600, it is 1600. We are taking always the lower value. And for Z, units 300, and the lower value is the net realizable value, it's 15. It's 15. So, 300 into 15, it is 4500. 4500. So, what is the total here now? 4500 plus 1600 plus 700. It is 6800. 6800. So, this is the value of the closing inventory. Why? We need to take the quantity. Yes, we need to take the quantity. Why? Quantity we can't take, no? And when we are taking the amount, the rupee value, we need to take whichever is lower. We need to take whichever is lower. So, here I took the cost, it was the lower one. Here I took the net realizable value, it was the lower one. And here I took again the net realizable value, it was the lower one. So, I got the total inventory value of X, total inventory value of Y, total inventory value of Z, then I took the total. This is the value of total inventory at the year end. This is the value of total inventory at the year end. After getting the answer as 6,800, the inventory value, let's move on to how to calculate this cost. Here I have just given the cost now. Without saying anything, I have just given the cost here. I haven't said anything, just I have given the cost. But we need to know how to calculate this cost. We need to know how to calculate this cost. So, LKAS 2 say when it comes to the cost of inventories, this cost of the inventory contains 3 parts. The cost of the inventory contains 3 parts. One is the purchase cost. One is the purchase cost. That means simply the purchase price. Simply the purchase price. And other one is the conversion cost. Purchase cost plus conversion cost. Not only that, there can be some other costs. There can be some other costs. So, LKAS 2 say the cost of inventory contains 3 types of costs: purchase cost, conversion cost, and the other cost. Okay. So, now let's dive into the costs and see what are the components. So, here I have given you set of examples. The 3 types, okay, the 3 types. Then you can get a good understanding. So, here when it comes to cost of purchase, I told you usually cost of purchase contains the purchase price. Usually the cost of purchase contains the purchase price. Not only that, here purchase price plus the import duties and other taxes. Here import duties means when you are importing goods from other countries, you need to pay a levy, import duty. So, import duties plus other taxes. There can be some other taxes. These other taxes should be non-refundable. Make a note. These other taxes should be non-refundable. That means we should not have the ability to reclaim that tax from the Inland Revenue Department. That's why we say non-refundable. And then, not only that, and the transport, handling, and likewise the directly attributable costs. Now, once we purchase goods from someone else's company or the business, we need to take those into our place. Without bringing those into our place, how can we do the business? How can we sell, or how can we make it a finished good to sell? So, once we buy that from someone else's place, we need to bring that. Only then we can sell, or we can produce it to a sell. Okay. Therefore, those directly attributable costs need to be added. After getting all these things, we need to deduct here. We need to deduct any trade discounts if we get any trade discounts. From AAT 1, from your O levels, you have learned that trade discounts are not accounted. Therefore, when we are determining any value, we need to take the after trade discount amount. Okay. Therefore, here we need to deduct the trade discount. Okay. We need to deduct the trade discount. You have another way to do this. When you are taking this purchase price, you can take the purchase price after deducting the trade discount. If you take the purchase price after deducting the trade discount, then you do not need to again deduct it. So don't memorize these formulas. Think by yourself. If you take the purchase price after trade discount, do you need to re-deduct it again? Never. You can't deduct trade discounts twice. You can deduct it only one time. Therefore, if you take the purchase price after trade discount here, then you can't deduct trade discounts again. Okay. Then you can't deduct trade discounts again. Clear? Okay. Your notes ලියාගන්න, you should make your own notes. You can pause the recording and make notes. You can pause the recording and make notes. That's what the benefit is. That's what the benefit is. In a physical classroom, can you pause? Can you pause the lecture and rewind the lecture? It's really hard, no? It's really hard. But in a recording, it's very easy. You can just pause and rewind it. Okay. Now we covered the cost of purchases. Not only the cost of purchases, the second part, the cost of conversion. Cost of conversion. That means, you know, we have raw materials. No? We have raw materials with us. We purchased raw materials. Now we want to convert these raw materials into finished goods. We need to convert these raw materials into finished goods. Any cost you incur in converting raw materials into finished goods, any cost that you incur when you are converting these raw materials into finished good, those are known as conversion cost. Those are known as conversion cost. So this conversion cost includes direct labor cost and fixed production overhead cost and variable production overhead cost. Okay, fixed production overhead cost, variable production overhead cost, likewise. Okay, so now in summary, if you take the conversion cost have the direct labor plus production overhead cost. Make notes, DC, not DC, DL, direct labor plus production overhead cost, POHC, production overhead cost, production overhead cost. Okay, so great. Now we know the cost of conversion also. And can we include any non-manufacturing or non-production overhead cost? Can we include any cost that we incur not for the production? No, we can't. We can incur cost for any reason, but we can't add all the stuff into the cost of conversion. We can add only the cost of production. Cost of production. Okay. And then other costs. Any other cost should only be recognized if they are incurred in bringing the inventories to their present location and condition. If we incur any kind of a cost and that cost is a must to make sure that inventory item is, or else how I can say, we need to incur that expense. It's a must to incur that expense in order to bring that inventory item to the current location and condition. Now think, you need to prepare or else you need to make a shirt. Okay, you need to make a shirt. This is not a house, this is a shirt. Okay, this is a shirt. Now to make this shirt, okay, to make this shirt, you need to have a specific design. You need to have a specific design. Without incurring a cost for this specific design, can you make this shirt? Can you make this shirt? Without incurring cost for this specific design, can you make this shirt? You can't. Therefore, in order to bring this shirt into the current condition or the required condition, you should have this design. Without having that design, you can't make that shirt in a way that you require. Therefore, this is a must. This cost is a must. Therefore, this design, the design cost, the cost of the designer can be taken into the cost of the inventory. Cost of the designer can be taken into the cost of the inventory. Therefore, my dear students, now you are very clear. Cost of inventories contains cost of purchases, conversion and other costs. Here the cost of purchases include mainly the purchase price, import duties, transport and handling fee and trade discounts. So here we need to less the trade discounts, we need to deduct the trade discounts, and we have cost of conversion. I told you conversion cost means the cost that we incur to convert raw materials into finished goods. Therefore, we can have direct labor, production overhead costs. It can be variable or fixed. Finally, the other cost. Without this cost, you can't make the t-shirt into a reality or shirt into a reality. That's why it will become a cost. Okay. Therefore, my dear students, when you are determining whether a cost is a part of the cost of the inventory, you need to critically evaluate that. You need to critically evaluate that. Okay. So, let's move forward. Okay. While standards say cost of purchases, cost of conversion, other cost can be included in the cost of the inventory, standard specifically mention some set of costs cannot be included. In case if the examiner asks about these set of costs cannot be included within the inventory. Okay. The first one is the abnormal amounts of wasted materials, labor or overhead costs. So, we give another name, just take down abnormal losses. You will learn abnormal losses in another step. Okay. Here you are not going to learn abnormal losses, just keep in your mind there are some things called abnormal losses. These abnormal losses are not taken into the cost of the inventory, but if it is a normal losses are taken as a part of the inventory. Then the storage costs. Now you need to know something about this storage cost. Usually when it comes to the storage cost, we are storing raw materials and we are storing the finished goods. Usually the work in progress is not stored because it is always in the production flow. So in the warehouses we are storing raw materials and finished goods. Now once the good is finished, once the good is completely worked out, we are storing that good. Can we take that into the cost of the finished good? Can't. Why? Because the good is already in the current location and condition, which is in a saleable condition. Therefore, once the good become a finished good, if you storage that, it won't change the condition of that asset, or else it won't change the condition of that inventory item. Therefore, we cannot include finished good, the finished good storage charge. But when it comes to raw material, without storing the raw material, we can't make the finished good. Therefore, storing raw material is a must to make a finished good. Hence, this raw material cost can be included. This can be included. Make notes. This can be included. So, when it comes to storage cost, the finished goods storage cost cannot be included. That's why they have mentioned it here. But when it comes to the raw material, this raw material storage cost can be included. It can be included. Okay. Then the administrative overhead costs, admin expenses. Usually these are the admin expenses. And then selling cost. So usually the finished goods storage charge will become a selling cost, selling and distribution cost. Okay, selling and distribution cost. Okay. So then if we are not recognizing these costs, okay, if we are not recognizing these costs in the cost of inventory, where we are going to record that? We need to record them as expenses. We need to record them as expenses in the period they incur in the profit or loss statement. In the profit or loss statement, because these are expenses. These will not form an asset. Inventories are assets, but these are not a part of that asset. These are just expenses. Therefore, what you need to do is you need to recognize them as expenses in the period they incur. If we incur an abnormal loss in current year, then we need to recognize this abnormal loss under admin expenses or other expenses in profit or loss. If we incur storage cost, usually we will recognize that under distribution expenses. If we incur administrative overhead cost, it is definitely an admin expense. If you incur selling cost, it is an S&D expense, selling and distribution expense. Therefore, my dear students, it is very clear that we are not going to include any abnormal amount or abnormal loss, storage cost of finished goods, admin cost and selling cost in the cost of inventory. Otherwise, or else unless we recognize them as expenses in the period they incur. We recognize them as expenses in the period they incur. Okay. Hope you are clear. If you are not clear, you can reach me out or else rewind the recording and watch. Rewind the recording and watch. Okay. One more thing you need to learn. One more thing you need to learn. So let me explain that. Make a note of that. Another thing, cost which would not be included in the cost of inventories. Another important thing is the recoverable taxes. Recoverable taxes. Make a note. Recoverable taxes. Here I told you, when it comes to the taxes, we are including only non-refundable taxes. Those are same. Here we can include in the cost only if the tax is non-refundable. Non-refundable. Okay. So here this is how the summary goes. We have taxes. If the tax is refundable or recoverable, refundable, non-refundable. Make notes, okay. If the tax is non-refundable, we can include in the cost. We can include in the cost of the inventory. If the tax is refundable, we cannot include. We cannot include. We cannot include. So keep in your mind, when a tax is given as a refundable tax, you cannot include it in the cost of the inventory. When the tax is a non-refundable tax, you can include it in the cost of the inventory. If I give you examples, so these import duties are non-refundable taxes. Import duties. import duties are non-refundable taxes. But value added tax, VAT is a refundable tax. We can claim the input VAT. We can request that input VAT, or else we can set off that input VAT against the output VAT. Therefore, VAT is a refundable tax. Therefore, in a question, you can't include VAT in the cost of the inventory. This is same for PPE also. Here, keep in your mind, you can't include VAT in the cost. Why? Because it is refundable. We can reclaim that. Therefore, we can't capitalize it as an asset. Because it will recognize as a separate asset. Therefore, we cannot include. So, here the cost which would not be included in the cost of inventory, okay, you should know the refundable or recoverable taxes. So, recoverable taxes, in other terms, refundable taxes. Okay. Great. Now let's go for the next activity. Let's read this activity. IAS2 or else LKAS2. Inventories defines the items that may be included in computing the value of an inventory of finished goods manufactured by a business. Okay, this is a finished good manufactured by a business. Okay, this is a finished good manufactured by a business. Now, let's check what we can include. Which one of the following lists consists only items which may be included, only the items that can be included in the statement of financial position value of such inventories. Okay. Now we need to identify only what costs that can be included within the inventory cost. Let's read. First of all, you try. Now pause the video and you try the answer. Then you watch the recording and tick your answer whether it is correct or wrong. Okay. Let's read A. So here, foreman's wages, carriage inwards, carriage outwards, raw materials. Okay. That means the raw material cost. Now foreman's wages. Foreman means what? Foreman is a factory worker. We can include. Carriage inwards, the transport cost that we incur to bring the purchased goods to our location. We can include that. Carriage outwards. We can't include carriage outwards. Why? Carriage outward means the cost that we incur to distribute goods. Those are distribution expenses. Carriage inwards can be included, but carriage outwards cannot because it is a distribution expense. And the raw material cost can. Therefore, A will not work out. Then, raw materials, carriage inwards, cost of storage of finished goods cannot. Cost of storage of finished goods, I told you. Once we are done with finishing the good only we are storing. Then it is not a directly attributable cost, or it is not a cost that is a must to make sure the good is in present location and condition. Okay. Then plant depreciation, carriage inwards, raw materials and foreman's wages. Yes. This is the answer. Answer is answer number C. Plant depreciation can be taken. Why? The plants are depreciated only when the goods are produced. Carriage inwards, yes, can. Raw material cost can. Foreman's wages can. I told you it's a factory worker. So let's see the last one, carriage outwards. It starts from the carriage outwards. We can't include carriage outwards. It's a distribution expense. Therefore, my dears, answer is answer number C. Now, with those examples also, take these things into your mind. If we are to take a cost as the cost of the good, it should be a must, or that cost should be a must to make that inventory item in the current location and condition. In the current location and condition. Okay. So that is how question number 2, activity number 2 goes. Okay. Let's discuss another activity relating to the cost. So the below details are relating to Y. It's a good. Okay. Y is the good. I am not asking a question. It's Y. Good. Of Susanta PLC. Purchased. Okay. First of all, let's see what's the requirement. Calculate the cost of purchased inventories. Calculate the cost of purchased inventories. Okay. So I will do the calculation here. I have a separate slide for that also, but I will do this calculation here without writing any names. Okay, without writing any names, but just I will calculate. So all these things are in rupees. All these things are in rupees. So purchase 1000 units of Y at 100 rupees per unit. So 1000 into 100, how much? 1000 into 100, it's 100,000. 1000 into 100, it's 100,000. Done. And here trade discount received is 2% of the purchase price. Now from this I receive a trade discount of 2. So how much is the 2%? 2%. It's 2000. Yes, it's 2000. It's 2000. That means 98,000 is the purchase price after trade discount. Okay. Done. Considered. Then loading and unloading charges, you know we can. Those are the handling costs. So we can take it also 10,000. Vessel fee and insurance 28,000. So this is the import actual. That's why there is a vessel fee. If it is an import, without insuring we can't get it to here. Without putting that into a vessel and paying the vessel fee, we can't get into that here. So it is a must to incur that cost in order to bring that good into the present condition and location. Actually it's to get that into the present location. Therefore we need to take that 28,000 also. 28,000. Then unclaimable taxes. I told you if the tax is claimable, recoverable or receivable, then we can't take it into the cost. But here it is unclaimable. Therefore we can. Therefore we can. Then here claimable, recoverable taxes 2000, we can't. This can't. This can't. Why? It is claimable. Then carriage inwards, yes. We can take 15,000. 15,000. So let's get the total. Let's get the total. 98,000, 10,000, 28,000, 5,000 plus 15,000. It's 156,000. It is 156,000. It's 156,000. So this is how the cost is calculated. Now you have an idea what I took into the cost, what I omitted from the cost. Okay, done. Now let's move on to the fourth one. I can do that calculation also here. Okay, I have enough space. So below details are relating to Excluded of Sasanga PLC. We are required to calculate the cost of inventories. So purchase price 20,000. So rupees. Purchase price 20,000. 20,000 done, can be taken. Carriage inwards can be taken 10,000. Direct labor cost 10 rupees per unit. This is the conversion cost. This is the conversion cost. You know direct labor cost can be taken. So 10 rupees per unit and we have 500 units. So 500 into 10, it is 5,000. It is 5,000. Then direct other costs 2 per unit. So 500 units, 2 rupees per unit, it is 1,000. It is 1,000. Then non-production overhead cost. Here this is non-production. Non-production. Can we include? No, we can't. So non-production overhead we can't include. We can include the production overhead cost 5,000. We can include the production overhead cost 5,000. And then abnormal loss on materials. Here it is not the normal loss but the abnormal loss. We can't. I told you abnormal losses cannot be included in the cost. They need to be expensed in the period that they incur. Then the designing fee of the designer. Without designing the good, we can't make it into the required condition. So we need to design that. Therefore, this 8,000 can be taken. This 8,000 can be taken. So let's take the total 20 plus 10, 30, 35, 36, 44, 49. 49,000. 30, 35, 36, 41, 49. Yes, it's 49,000. So 49,000 is the cost of X good. Is the cost of X good. Okay, done. If you have any doubt, please reach me out. Okay, done. Okay, so answer is in the prior slide. Answer is in the prior slide. Okay, now we are done with what? Now we are done with cost. Now we are done with cost. We know how to calculate the cost. Okay, now you can draw. Now you can draw. All right.